Hey everyone, the prop firm business is booming, which is great for us retail traders. And there's been a lot of attention on the new funding account called Ment funding. I wanted to give it a little comparison to My Forex Funds, which is my funded account, and really just compare apples to apples and see how different it really is. Hey everyone, welcome back to the channel. I'm DD Trader. And in this video, I want to compare My Forex Funds to Ment funding. And I'll be straight up. I have an affiliate with My Forex Funds. I love My Forex Funds, so I have benefit to give them a good review. But I want to make it as honest as possible and compare them as much as we possibly can. So let's get into it. So what I want to compare is the two biggest funding accounts. Ment funding, first they had $1 million funding account, and now they have a $2 million funding account, which is just nuts. And it's just great for us retail traders that there's such an option out there, $2 million of a funded account. My Forex Funds, their biggest opportunity for a funded account is $200,000, but that's not exactly true. Really, you could get 3 accounts for a total of $600,000 with them, which is much more comparable to the $2 million. Hey DD, you might say, but you could also get 3 $2 million accounts with Ment funding, isn't that true? The truth is, I don't even know if it's true. It's possible, but I'm not sure if they wanted to put that much money into one trader. But the problem is this, the purchase cost. The purchase cost, as we all know, for Ment funding's $2 million account is $15,000. That's what you're paying to take an evaluation. Now, My Forex Funds, for their $200,000 account, is $979. So $979 times 3 is $2,937. Let's call that $3,000. That's 1/5 of the $15,000 of Ment funding. So for $600,000 of funded accounts, you could pay $3,000, or you could pay $15,000 for $2 million account. Now, when we're getting into the evaluation, so everyone likes to talk about that the Ment funding account, they don't have a minimum or maximum day. So you could just keep on going until you make that 10% that they want. With My Forex Funds, you need to make 8% in the first phase, and in the second phase, from day 31 to day 90, you need to make an additional 5%. Now, Ment funding is a little bit better in that sense because they have only one phase and you only need to make 10% and you have unlimited time. But let's just think about that. So it's great if you have unlimited time and you start off in drawdown and you can't get your act together and you need all that time. That I understand. But if you are a consistent profitable trader and you figure out, you know, we all start off in drawdown and then we work our way up. How much time do you need? How much time do you need when you're actually trading the $2 million account? Are you going to make any money with a $2 million account? If you're not, if you haven't shown consistent profitability, you'd be nuts to risk $15,000 and just to get this $2 million account for who knows how long. So you gotta be a little bit careful when you're talking about that unlimited time because, you know, I think to make 8% in 30 days, and they give a number of extensions with My Forex Funds, so you could get another 15 days and another 15 days, and they have unlimited restarts. So, you know, as long as you haven't violated any of the breaches or you're above the $200,000. So it's not unlimited, but it's totally not impossible either to make that 8%, although it's a little bit much. And to make from day 31 to day 90 an additional 5%, if you're not able to do that in 60 days, you know, on a somewhat consistent basis, then you're not a consistent trader and you probably shouldn't be getting this funded account yet. So I don't see it as such a big deal. So the big purchase ticket of $15,000 is a big drawdown for me. Now let's get to the drawdown. The maximum drawdown with Ment funding is 5%, as opposed to My Forex Funds of 12%. This is everything to me. This makes the biggest difference because in order to trade Ment funding and only be able to lose 5% and you're out your 15 grand if you lose your 5%, or even when you have a $2 million account, God bless you, and you go down 5%, you lose it, it's a huge loss. And that is not a lot of money. So the only way to trade it, I don't know if you guys thought of it, but the only way to trade it is to have the right risk per trade strategy. Now, let's compare them apples to apples. Imagine with My Forex Funds, you're allowed to lose a maximum drawdown of 12%, right? So that means you're going to want to risk, let's say 1% per trade. So that gives you, if you lose 12 trades in a row, you're gone. So you have to compare that the same way with Ment funding. If you're going to trade Ment funding, you also don't want to be out in 5 trades trading 1%. You want to divide that among 12 trades. So in order to do that, you're only trading 1/4% per trade, which comes out to $8,300, right? And that's $100,000, which is the 5% that you're allowed to lose, right? 5% of 2 million is $100,000, and that's the maximum you're allowed to lose. And you divide that by 12. So if you keep on losing $8,300, 12 times, you're out. And the same thing in My Forex Funds. With these 3 accounts, if you lose $6,000 12 times, then you lost the $72,000 and you lost the 3 $200,000 accounts. Now, you might say to me, oh, you're not comparing apples to apples because you're talking about winning 3 evaluations. That's how you get. You have to have a $200,000 valuation, you win. Another one, and you win. Another one, and you win. But let's just also compare the purchase price. Now, for $3,000 or $2,900, you have those 3 evaluations. And if you need to take a retake, it's like $880 as opposed to $980. So you could probably take 16 or 17 different evaluations for that same $15,000 that you're spending on the $2 million account. So you could take evaluation after evaluation after evaluation, and if you're somewhat consistent, you probably should pass those evaluations, what, after 5 times? Like, what is it? Like, how long is it possibly going to take you to pass the evaluation? So since Ment funding is so expensive, you have all that opportunity to take all these evaluations with My Forex Funds. But again, we're comparing it apples to apples here, and you're trading 1/4% with Ment funding so that you don't blow your account in 5 trades. You'll blow your account if you lose 12 trades in a row. And that's what we want to compare with My Forex Funds and Ment funding. So now let's get into the expectancy. When we talk about expectancy, we need the following 2 stats. Person has to know based on their back testing and their forward testing and how they trade. If you made 100 trades, you made 1,000 trades, you know that I have a 45% winning percentage with my strategy, let's say. And every time that I trade, I always have a 2-to-1 risk to reward ratio. So if I'm risking $100, I'm making $200. And in all those trades that I do that, when I'm risking $100 to make $200, for example, then I have a 45% winning percentage. That means I win 45% of the time and I lose 55% of the times. So let's put that into the expectancy formula. If you guys don't know how to run the expectancy formula, I have it in my course, helpwithtrading.com. We have a really in-depth risk management part of the course. We learn about positive expectancy, how much to risk per trade, how to open the right position size for you. It's very important. It's probably the second most important thing after developing a trader's mindset. So it's really important, and you can check it out at helpwithtrading.com. So we have the 45% winning percentage based on our stats. We have the 2-to-1 risk to reward ratio, and now let's put it together. So with Ment funding, this is what I'm seeing. And now we're using the same 45% winning percentage, and we're using the same 2-to-1 risk to reward ratio. So you have the $16,666 is for every win, right? Because you're risking $8,300 and change for every trade. That's what we said, right? Which is 1/4%. You're risking $8,300 to make $16,600. So all your wins are 16,000 and change, and all your losses are 8,300 and change. So 16,666 times 45% minus $8,300 times 55%. That's, in essence, $7,500 minus $2,117, which is $4,583 per trade. That means with expectancy, and again, you want to see in my course what expectancy is all about, it means that every trade you make, you're making $4,583, right? Because you look at your wins and losses together and use the expectancy formula, and you could bank on, and this really helps your trader's mindset because you know when I'm losing, I'm also making money. Every trade will be $4,583. Now, with My Forex Funds, So you have a $12,000 for the win and $6,000 for the loss, right? 2 to 1. And 45% of the time you make $12,000 and 55% of the time you lose $6,000. So that's $12,000 minus $6,000, which is $5,400 minus $3,300, which is $2,100 per trade. Now, I'm not gonna lie, it's not as good as $4,583 per trade. It's about half. But the point is this, you're spending 20% of the money for those 3 evaluations to get $600,000 account. You're spending $3,000 almost, as opposed to $15,000, which is a huge ticket. And you're having $600,000 of funded accounts as opposed to $2 million of funded accounts. But here's the point, since you're only able to lose 5% of your account, you'd be nuts to trade 1% or 2% per trade, because in a couple of trades, you'd be out. So even though it's a $2 million account, you can't look at it like a $2 million account, because you need to be much more conservative with your risk, or else you'll blow out your account by losing 5%. That's the point. That's what people don't realize. So people think, oh, it's $15,000, but if I only had $15,000, I would totally get it and get the $2 million account. But you can't trade it like a $2 million account, because who in their right mind would trade aggressively when your maximum drawdown is 5%? When your maximum drawdown is 12%, I hear you could trade 1% per trade. And that shows you that you'll make $2,100 per trade with this example of expectancy, or whatever expectancy you want to do, as long as you compare them. It's about half. That $600,000 account is about half, because that $2 million account needs to be traded like $1.2 million. So you're spending $15,000, but you need to be so conservative that it's like $1,200,000 funded account and not really like a $2 million account. That's what you need to think about. You need to control your risk very strongly with such an aggressive maximum drawdown. So, you know, I love My Forex Funds, and if you want to check them out, check the link below in my description. My Forex Funds is a great funded account. They have great customer service. They're rated really well on Trustpilot, and so is Ment Funding. But I think it's still really expensive, and I'm sure My Forex Funds and the other prop firms are gonna come up with something interesting to try to compare. But as long as Ment Funding is going with this 5% drawdown, that really just knocks down the $2 million to about $1 million, $1.2 million, or whatever it is, because you need to be a lot more conservative with the risk if you're only allowed to lose 5%. That's just my 2 cents, guys, and I think if you think about it, it makes a lot of sense. So My Forex Funds is the way to go, and we'll see you in the next video. Take care, guys. DD out.